I present the budget for the year 2022-23.
The e-rupee was announced in the budget this year, when cryptocurrencies were still an investor favorite. 10 months later, global crypto biggies are falling like 9 pins while the digital rupee is gaining traction, probably readying for a big announcement in the budget 2023. The Reserve Bank of India today rolled out its pilot project to test the e-rupee in the retail set. Last month, it tested the digital e-rupee with 9 major banks in wholesale environment in the settlement of secondary market transactions in government securities. The retail pilot, which began today, involves 4 banks: the State Bank of India, ICICI Bank, Yes Bank, and the IDFC First Bank. 4 more banks, the Bank of Baroda, Union Bank of India, HDFC Bank, and Kotak Mahindra Bank, will join the pilot subsequently. The pilot project initially covers 4 cities: New Delhi, Mumbai, Bengaluru, and Bhubaneswar. It will later extend to Ahmedabad, Gangtok, Guwahati, Hyderabad, Indore, Kochi, Lucknow, Patna, and Shimla.
Users will be able to transact via their digital e-rupee, and their e-rupees would be stored on digital wallets which would be provided by participating banks. The transactions can be person to person or person to merchant, and the transactions will be via QR code, which means it would be similar to the UPI experience.
The e-rupee will be in the form of a digital token that represents legal tender. It will be issued and distributed by banks in the same denominations that paper currency and coins are currently issued. The difference with cryptocurrencies are stark and obvious. One is a legal tender, the other is not. One is backed by the central government, the other is backed by a mercurial market. One has the same value as the rupee, the other has a notional value. One is issued by the RBI while the other is mined in mysterious ways. However, the more complicated comparison is between the e-rupee and the existing digital payments. While the e-rupee is a legal tender issued by the RBI, a digital payment is only entries in the bank ledger, a transaction. Both, however, hold the same value as the rupee. The CBDC is the liability of the central bank, while digital payments are the liability of bank handling the transaction. The e-rupee will be direct exchange between the payer and the payee, while digital payments usually involves a third party. RBI is also devising ways to ensure offline availability of the e-rupee. In contrast, digital payments need internet connectivity. For the government, the biggest challenge in the launch of the central bank digital currency is the security implications. A recent report by the RBI highlighted digital fraud, data breaches, lack of privacy, and digital security incidents as the biggest risks.
Well, CBDCs are a very new concept, not just for India, but for everyone in the world. As we've previously reported, only a handful of the countries in the world have their very own CBDC. If this becomes successful, it's not just going to reduce the cost of printing money for the RBI, but it will make transactions efficient, transparent, as well as instantaneous. This was Akanksha Chaturvedi for Business Today TV.
We're now joined by Teena Jain Kaushal, personal finance editor of the Business Today magazine. Teena, what are the rules of using the digital rupee?
Abha, there are a couple of rules of using the digital rupee. First of all, we have to understand that it is a currency in digital token form, and it's on a blockchain. And this electronic currency is backed by RBI. It is just like your physical currency, but instead of wallet, you will carry it in your mobile. Also, we need to understand that it is a mode of payment. There are already many modes of digital payment. We have RTGS, we have NEFT, we have IMPS. On this, there is additional layer of payment, which is central bank digital currency, CBDC. So what is expected of CBDC is it will make the settlements and payments very fast compared to the existing, and it will be cost efficient also. So this is what sets apart CBDC from the physical currency.
Okay, Teena, how will it be different from other digital payment methods?
Other digital payment method, if I take the example of UPI, there the transactions are happening bank to bank. Your money is getting transferred from one bank account to another bank account. But in case of CBDC or digital rupee, we have two-tier model. Here the money is issued by the RBI. RBI is the issuer and banks are the distributor. Already 4 banks have been listed: Yes Bank, SBI, and ICICI Bank and IDFC First Bank. These are the distributors in the first phase. Later on, we will have 9 more banks in the 4 cities currently. The point is this will help in easy distribution of money, and your money will be deducted in one go from your bank account, and then subsequently transactions will happen bank to bank or wallet to wallet.
Teena, thanks so much for joining us with that. What really does this e-rupee do? Does it promise to fundamentally alter currency as we know it? Answers to this and questions like whether or not you'll earn interest on the e-rupee in this conversation that Business Today TV managing editor Siddharth Zarabi had with two fintech entrepreneurs.
Will my e-rupee get me any interest? मतलब कुछ पैसा तो मिलेगा ना if it's in the account. कि ऐसा तो नहीं कि सरकार ने अपने कॉस्ट भी कम कर दिए और मेरी जेब भी काट देगी.
So I think currently the way it's envisioned and the way they've talked about it is that the interest will not be given on the e-rupee aspect.
And why would that be? What is the logic behind it?
See, I mean, obviously there could be different rationale, but if I were to stab a guess at it, right, the way it is, like you said, right, earlier RBI was the banker to the banks or the banker to the government, right? If RBI today is also going to offer an interest rate, right, all of us would like to bank with RBI and not bank with an intermediary bank. I mean, everybody wants to bank with the big boss.
The Gulf, where our fellow Indians work in significant numbers, and that is the largest personal non-corporate remittance inflow route for India. What you are telling our viewers is that imagine a future where all the money where those fellow countrymen are using and paying sort of charges on the transfer of their money to their families, to their parents, to their wives, son, that will could be done by the e-rupee, and the transaction cost for such people would be negligible or nil.
India today is poised to, I think, receive about $100 billion in the current fiscal year from Indians residing overseas. That is one aspect, like, there's going to be a reduction in the cost of the fees and then a reduction in time. If you just reduce the time from 3 days to an instant, right, you have just increased every dollar, right, which would have come $3 billion every day coming in, right, 3 days later, you've increased the remittances by 10% in the current year. And let's not forget the domestic remittance market. It is huge. Indians domestically that are settled in Bombay, in Bangalore, sending money to, let's say, their hometowns back, in different parts of the country. I think all of these costs, right, are going to get significantly reduced, eliminated. The time at which these remittances happen will see significant changes. And I think the ultimate beneficiaries are going to be the end consumers.
If you like the video, do like, comment, share and subscribe.